Circle, a global crypto finance company, breaking news on a new $110 million funding round, pushing its market valuation to nearly $3 billion. The investment is led by Bitmain, which will be a key strategic partner in supporting Circle's price-stable tokenized U.S. dollar coins, USDCs. Joining us now, Jeremy Allaire, the co-founder, chairman, and CEO of Circle. Jeremy, welcome to the show.
Thanks. Glad to be here.
So Bitmain is one of China's largest mining technology firms. What does that bring you?
Yeah, so Bitmain is probably the largest, most profitable company in the crypto industry, and they provide the infrastructure that processes a huge percentage of the transactions that run on all of these different blockchain networks. And that infrastructure actually is core to the security of these transactions, so the immutability of these blockchains. So they're a really fundamental infrastructure provider, which is great. But Jihan Wu, the founder, and I share a vision that we can build more and more layers of the financial system on top of this infrastructure. And in particular, we're collaborating on a model which allows us to take traditional fiat currencies like the US dollar, the euro, the yen, and tokenize those and actually run those over these public blockchain networks to allow for much faster settlement, more secure settlement, and the participation of fiat in smart contracts.
So this is a so-called stablecoin. There are many, many stablecoins popping up because of the volatility of other cryptocurrencies, like a Bitcoin prevents people from actually wanting to transact in them. So who is the end user of this? Where do you see as the goal of this in the end?
Yeah, I mean, there's really three important use cases for fiat tokens over blockchains. One is exactly as you described, which is people who are investing and trading. They need to be able to hedge, and they need to be able to do that in a fast, frictionless way that's integrated with the existing banking system. And so that's a core use case for these fiat stablecoins. The last two, or the other two, are much more powerful, though. I think one is we have this ability with things called smart contracts to create contracts for things like debt or equity or other types of financial contracts. We can now denominate those in fiat, which is really key to making that infrastructure work for a much broader range of capital market use cases. And then the last but not least is ubiquitous free global payments. This is a way that you can essentially allow people to transmit dollars or any currency in 15 seconds to any device anywhere in the world in a very safe, secure way. And so it really opens up the potential for more ubiquitous free payment infrastructure on the internet.
And it's interesting because a lot of markets, emerging markets, like Africa, a lot of apps and companies have been created around this frictionless transfer of money, remittances, et cetera, but they are using and they choose to use Bitcoin because of the liquidity. How do you combat that? How do you get USDCs up to par?
Yeah, I mean, clearly the U.S. dollar, for example, is the most liquid currency market in the world, and so obviously marrying that and the desirability of that as a stable, store of value, as a stable, medium of exchange, with the efficiencies and security and global reach of blockchain technology is really powerful. I think it'll be a better way for mobile devices that want to handle these kinds of payments globally.
As you describe it there, it seems to me we're talking about a new kind of software protocol, a new piece of the infrastructure of the guts of the financial system. How does that have any connection to crypto as an asset, right? So there seems to be this divide out there between how to think about it.
Well, so there's really two things. I mean, the first is, so these fiat tokens are issued through this open source technology scheme we've developed called Center. But in any case, that runs on top of infrastructure like Ethereum. So Ethereum you can think of as kind of like a global computer that you can run code on, but it's an hackable, kind of tamper-proof, secure computer that no one actually controls. It's sort of an open system. So we can build apps on top of it, and the US dollar is just an app that we're building on top of that. And that's really the interplay between these tokens and the underlying infrastructure.
You mentioned using USDCs as a hedge when you're trading, the need for that and the need for the stability of the hedge. Are you launching this thinking that institutional money is going to increasingly come into this space? There are going to be more futures contracts tied to other cryptos, et cetera?
Yeah, absolutely. So we, a couple months ago, acquired one of the larger crypto exchanges, and that's an exchange that grew pretty dramatically last year. and allows people to trade in a really broad range of these digital assets. And we also run one of the largest market making and over-the-counter trading businesses in crypto, and that's all institutional. And so we want to enable easy on and off ramps for institutions who are, want to trade in these asset classes, and USDC creates a really simple way for global institutional participants to access these markets.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.